After a brief stint in the corporate graveyard, Spirit Airlines has officially exited bankruptcy with a plan to take on the big boys. The company is leaving behind its low-cost business model in favor of targeting more upscale travel, but moving away from its budget-exclusive routes might not be the solution it's made to be, especially considering the current uncertain state of the economy. Until recently, Spirit was one of the best-performing airlines in the US. From 2009 to 2019, it maintained an average net income margin of 10.3%, which was quite better than that of its competitors like Southwest, United, and Delta. It was able to achieve this by focusing on keeping its operating expenses low. But things changed in 2020. The pandemic hit airlines harder than a Spirit landing. Global air travel plummeted, and with that, so did the profits of the airline industry. And Spirit was never able to come back from its 2020 slump. While it did not take long for revenue to surpass pre-pandemic levels, the airline's bottom line has taken a huge hit. Rising operating expenses, such as increasing jet fuel prices and labor costs, and stiffer competition have hit the company hard. Additionally, Spirit was among the airlines most heavily affected by issues with Pratt & Whitney's engines, which forced it to ground multiple aircraft and drive up costs. Spirit has failed to report a positive net income since 2019 and has lost over $3 billion since the start of 2020. Mounting losses and looming debt payments forced the company to look at survival options. In 2024, JetBlue planned a $3.8 billion merger with Spirit, which many analysts believe would have been a lifeline for the company. But the Boston federal court blocked the merger, citing that it would hurt customers who depend on Spirit's low fares. The company's only option was bankruptcy, and in November 2024, it filed for bankruptcy protection, which allowed it to reorganize its debt. The restructuring deal allows Spirit to reduce its debt by about $750 million by converting debt into equity. It also received a $350 million equity investment from existing investors to support its future initiatives. Additionally, the company has said it is rebranding itself as a premium airline as its focus is to move away from price-conscious customers to more affluent travelers. This means offering more fare options beyond the cheap no-frills tickets the brand has always been known for. Spirit projects these moves will allow it to generate approximately 13% more revenue per passenger, which would hopefully positively reflect on the company's bottom line. Its move to rebrand as a premium airline is quite bold. But let's be real, one of the biggest obstacles in this transformation is reputation. For years, Spirit has been the airline known for cheap tickets, hidden fees, surprise cancellations, and the you get what you pay for experience. Slapping on a luxury label won't change that overnight. Additionally, the entire airline industry is experiencing a sort of a shock which might make Spirit's plans harder to achieve. Between wider economic turmoil, high-profile plane crashes, and other consumer uncertainty, major airlines have issued warnings about falling demand. In fact, carriers like Delta, Southwest, and American have all recently downgraded revenue outlooks for the first quarter, citing a slowdown in travel demand.